Well, welcome to the Redwood page on go-to-market design and excellence. We really appreciate you. I know you've been checking out hopefully some of our materials to kind of get a sense of how we like to do this work and some best practices that we think most companies can utilize to do so well. What we want to do in this video is give you kind of a 10 to 15 minute introduction to some and examples of some of the work that we like to do, the way that we like to think about this, and what that kind of looks like in practice. So I'm going to kind of walk you through some sanitized sample materials. I'll kind of walk you through some best practice, how we like to think about it. And I think hopefully this is really helpful. So quickly, a little bit about Redwood. We do kind of three major things. We do strategic planning, organizational design, and we do a lot of go-to-market design and other kind of go-to-market related work. So what that looks like is we'd like to optimize companies' sales and marketing organizations by crisply defining their key customer segments and needs, channel strategy, sales territories, and sales workforce planning to better serve customers and grow your top and bottom line. That is kind of what this looks like. And so we're going to give you an example of what that looks like in the pages to come, some kind of real world examples from previous client work. So let's start with, how do you do this, right? What are the kind of phases that come into this? And I think this is one thing that we really feel strongly about. I think a lot of times people do this at the margins. They'll sort of do this in an ad hoc or sort of unstructured way. We think if you really want to do this well, you want to have kind of a structured, clear process to kind of do this well. So the phases that we like to talk about are what we call sales context, customer segmentation, sales coverage model, and then transition planning. So I'll quickly walk through each of these. Sales context is really understanding, how are we going to market today? What is our sales organization look like? How does it work? What does our marketing organization look like? How does it work, right? Really, really understanding the current state is critical. We oftentimes find people have an instinct to kind of run past that. And it's really important to understand what's going on today if you want to do this well. The next thing is customer segmentation. We find that there is massive amounts of value in really, really understanding customer segmentation. Most companies have some type of cursory or high level understanding of their customers, but really getting that more granular view where you're adding extra dimensions is so valuable. And we'll show you some examples of why that's the case here in a second. We want to talk about sales coverage model. Once I know what my segments are, how do I sell to them, right? What do I want my go-to-market model to look like? Do I just do digital marketing, e-commerce? Do I do outside sales? Do I do inside sales? Really understand that's really important. And then transition planning. Once you've figured out, hey, look, here's how we want to sell. How do we actually move into that future state if it's different than what we're doing today? And that's almost always the case. So it's a little bit about process. If you have more questions or follow-ups, or you want to connect, this is something your organization is thinking about doing, obviously, we're trying to give you some helpful example inputs, et cetera, but we obviously have a lot more we can say about this. So feel free to reach out to us at inquiries@rwadvisors.com. That's inquiries@rwadvisors.com. And we can really dig into more of the details here. So let's jump in. So one thing that we think is really, really important, and we're going to kind of jump into the segmentation piece, is really understanding how to segment your customers. Most companies have some type of segmentation model in place. If nothing else, they kind of know how big customers are. Like, hey, different tiers of this customer, we sell 0 to 10,000, 10,000 to 50, and 50 and above, right? Might be one kind of way to do it based on size. But we think it's really important to try to add some other layers in if that's valuable, right? So 4 things that we see a lot of. One is customer size and value, right? How much are they buying from you and what's the margin? Typically picking one or both of those ways of looking at it. Another thing, what's the product mix? What are they buying from you? Are they buying a lot of consumables, or are they buying a lot of kind of like fixed, large, kind of capital equipment, right? And you might have a company that sells both. Really understanding, or are they just buying digital products? Are they buying physical products? How do you segment is really important. Channel mix. How are they buying from you? Understanding that, really, really, really critical. And then what do you think your share of wallet is, right? That's very, very important. You might have a customer that says, hey, look, we're at a pretty high share. We're above 50% share of wallet, or maybe we're above 80. That's, what we call a retained customer, versus if it's 20% or below, we would call it a developing customer. That might have a huge impact on how you want to sell to that customer. So one thing is just getting those dimensions down and figure out like which one's relevant for your company. And the reason we think it's really important to do this is if you just stay at the aggregate sales amount number, you can miss some really, really important information. So this is actually based on a kind of a real world example. We have a client here who had various customers. And if you look at this, you got customer A, B, and C. And they're all about the same size. You know, customer A was $77,000 in revenue. Customer B is 75. Customer C is 73. So, you know, pretty much in the same ballpark. So if we just looked at revenue, you'd say these are the same customer segment based on size. But that's actually pretty misleading because when you cut it based on channel, how are they buying from you? What we learned is there was massive differences. So customer A was actually buying a lot from a revenue perspective, 71% from sales visits. They were, for whatever reason, very responsive to that. When the salesperson came, they made large purchases. And they did do a little bit of e-com and they did some retail, but it was pretty marginal, right? And clearly, this was a customer that valued that sales visit. Customer B, interestingly, had some sales visits, but they weren't really producing a ton of results. But they were getting a ton of results from their inside sales rep. They had an inside salesperson calling this customer, and that was generating a lot of really positive results. So in the model, we ended up recommending to them, this would be assigned to an inside sales rep as their primary relationship. And the third one was really interesting. They bought a ton on e-com. They were a very e-com forward customer. Sometimes they would stop and do retail visits. Sometimes we would give them a call, but they weren't super responsive to it. And so in this one, you say, look, this is a self-serve customer. They're very happy. Maybe you have someone call them, depending on the share of wallet you think you have. But you know, like you want to meet people where they are, and this customer is really responsive to that channel. And so it makes sense to lead with it. So this is an example of where that more granular segmentation can really generate a lot of really helpful insights. So we want to start with how do we map these segments to the right channel of how we're going to sell to them. Kind of the standard, you know, it's always good to start with kind of industry practice across most companies that sell. There's going to be breakpoints in terms of where you want to sell differently. And let's take a classic sales organization where you've got an outside, inside, and self-serve. So you've got these three different buckets. You're going to have a value where you say, look, a customer above this, in general, the default is it's going to be covered by outside. You're going to have someone in the middle that's going to cover inside. And you might have someone who's more of a self-service below a certain number where it doesn't make sense to serve that customer with a salesperson. So that's a really, really good starting point. And you can kind of see some of the numbers that support that. And again, like I was saying in the previous page, there's also a lot of nuances here. So you, like some companies just use this and this is it. They just look at revenue and they map it. But like we said in the previous page, it's really important to take into consideration those other dimensions. So when we work with organizations where they have an outside sales organization, a lot of times over time, those outside territories, they start to get really messy. There's lots of customers are overlapping each other. And the last thing that you want when you're investing in outside sales force, which is expensive, is windshield time, right? And you have a lot of cases where companies are literally have outside sales people that are driving past each other because their customers overlap so much, right? They're driving in between each other's territories to serve customers. So it's really important to try to clean that up. It can make a huge impact on sales performance. So this is an example. We looked at a client. This is a very rough cut of what their sales territories look like. And we worked with them, and we're really abstracting here, but we actually looked at the individual account levels and we said, look, we had to redesign this. And working with their sales leaders, kind of figured that out. So in this case, we had some overlap. We had the Washington focus rep took on, we added because it was a high potential region. We optimized our kind of California coverage. We deprioritized Nevada and Utah. There just wasn't a lot there. We focused our Midwest rep on Oklahoma. We had some overlapping territories. We reconciled that. We extended the territory for the Ohio rep because there was a lot going on. And then we refocused our Gulf Coast rep on the greater Louisiana area. This is just an example. And the net of all that was we actually reduced the number of OSRs from 20 to 16 as well, which was an important priority for this company over the long run. It's obviously it's a transition process, but that's where we wanted to end up. Now, one thing that's really interesting, and this is kind of comes out of in the previous page, I mentioned that in this example, we deprioritized Nevada was one state that was deprioritized. Well, why is that? We will typically look at, hey, look, we could do an outside sales territory here, but is it big enough, the territory itself, to warrant having a dedicated outside sales rep? So in the left-hand side, you've got Nevada, and we looked at Nevada, and we said, look, we have 56 customers that qualify for outside sales coverage, but the total value of them is $1.6 million. And for this company, the break-even point for an outside sales rep was higher. So you might have customers that should be covered by an outside sales rep, but you don't have a territory. In that case, you want them to be covered by inside. Conversely, on the right-hand side, we had a territory, 65 customers with an aggregate value of $2.5 million of total sales. And for this company, that did warrant having an outside sales rep. So again, the territory design stuff gets really is really important and can get quite complicated. After you've done all of this, and I'm skipping some steps here, but after you've done it all, a lot of times there's maybe some changes that we want to make in our go-to-market organization. So in this case, we were working with a client at 75 roles in the organization. 40 outside, 30 inside, 3 sales support, and 2 digital marketing, excuse me. And then we did all this analytics that we kind of walked you through briefly. And what we found is that the future state was going to look different. We needed 6 less OSRs. We wanted to add 10 inside sales reps because we just realized there's a lot more customers that could be covered that way. And then we want to really double down on our our support functions. So we added 3 more sales support and 3 more digital marketing. So it was a total of 85 people. One thing that was interesting was because the OSR roles were more expensive, the net cost of this, the investment really was not that much, about 5%. But we were able to get 10 more people, and we think those 10 people were really focused on the right thing. That is a really good outcome of saying, hey, look, this is the future state that we want to be building towards, right? And there's a lot of benefit to be had from doing that. After you've done all of that, you've got to figure out, okay, who gets what customer? How do we actually assign individual customers? So there's a bunch of dimensions to take into consideration there. Current sales territories, current customer base, who has the overlap with customers in this territory, where is the rep located? We obviously want to minimize windshield time and travel time if it's not value add, and then historic performance. So, we want reps that have demonstrated higher performance. We want them in our higher priority areas. And so that's another dimension that we would take into consideration. And you use all of these to kind of figure out, look, who should get what territory, who should get what account, and really doing that in a thoughtful way. And this makes sure that your OSRs are covering your highest value customers to make up for the bigger investment they constitute. So that was a very short overview of kind of go-to-market design and excellence. Again, if you want access to a longer webinar, if you want to connect more on this, you have more questions, feel free to reach out to us at inquiries@rwadvisors.com. That's inquiries@rwadvisors.com. And thank you for spending some time with us. Hopefully this was helpful. Thank you.